Thursday, December 14th, market analysis, Dan Ehrlich, and the march continues. But I keep repeating that markets that are doing exactly what the indexes are currently doing are cruising for a bruising. Today's Thursday. Maybe it'll start today, tomorrow, but should very soon. A downside correction. Now the numbers are different because of the areas of resistance that the E-mini March futures contract, for example, has been able to overcome, and the other indexes as well. And I'll show you in just the matter of the next few minutes. New highs, new contract highs for the March E-mini. Doesn't tell the complete story. We are overbought to the tune of 88, which is extremely high. Excuse me. And by no means a territory which I would be recommending new long positions. In fact, here's where you should be looking at puts, selling calls, going short, taking profits on long positions, any and all, and more of those kinds of comments. Can't help myself. I've just seen this too many times. It hurts on the way up because you're not long necessarily. You might be. But picking the turning points is what I'm sometimes good at. All right. Next chart is the S&P, SPDR, SPY. Now, this does not expire, so this has much longer term perspectives that we can access. We have now been in new high ground for a day and a fraction since the highs that were made way back at the very beginning of the bear market of 2022. Now, there is a little bit more price action, and I mean a little, a week and a half or something, above where we just were this morning, which is still slight resistance. And we are almost at the minimum upside objective, believe it or not, from the, didn't work quite right. So I actually abandoned it in terms of predicting it to be a head and shoulder bottom that would be, working. But after March of this year, it continued higher, and this pattern had forecasted, when it looked good, a minimum upside objective of, 476.50, apparently 476.90, exactly. And we have been to 474 plus now. So it's done for all practical purposes. Plus, that objective is extremely close to historical highs, also resistance. And we are terribly overbought at 89.5. Look how many times we have been overbought. And I'll just give you this perspective because I'll raise the RSI, scale up, and squish the chart above and put my horizontal line at 89.78. The last time we were here was back in November of 21. Guess what? That was the end of a whole series of yellow overbought conditions. And let's put it back the way it was, right in here. It looks exactly like, very close to what we're doing right now. And it did start the topping out process. It usually would have been the highest high right away and a big down move, like this one here. And this one in here. This is really what I'm looking for, a minor 1 week retracement. Remember the Santa Claus rally, and I'll give you some information on this. We're going to pin it down to the exact minute next week. We're going to start buying on next Wednesday morning, Thursday morning, Friday morning next week, basically the S&P 500 SPDR, but you can do it in the E-mini or any other index that behaves similar to the SPDR, and maybe even better this year. But the track record's in the SPDR. And when to get out, and an alternative as to how to get out, as well as what the rules that as I learn them say, and show you the track record, which has been very good. 2 years ago, we had over a $3,000 profit on one Santa Claus rally. Not last year, it wasn't quite as good. Now, next chart. Can't help it. Everything I look at here looks like maybe it's topping out. Oh, the spider came up just a few minutes ago, all the way up to the opening half an hour high. And by the way, there is still a very small gap. I think it's 40 hundredths on the spider to close. At the moment, that looks like an exhaustion gap, but the day's not over. Next, DIA came down almost exactly, even on the minute chart, to the high of yesterday after a gap up opening, closed the gap, made new highs, and is now slipping a little bit. Now, I'm just noticing the Qs have just turned red. They're down 30 cents at the moment, and we'll look at them in just a matter of a moment. The next chart is the Russell 2000, which is very important. You have to realize that the Russell 2000 has screamed higher the last 2 days. This morning it gapped higher a really large amount and blew out the highs, going all the way back to a high similar that was in August of 22, over a year ago. Now, that is also very profound because the other highs that go back as far as April of 22 are not much higher. So although I'm expecting a downside correction literally any second, and I'm not getting it yet, it's okay. I am still very bullish long-term and have said so for ever since really October 13th of last year, when we had the October lows again and a bullish engulfing right in the middle of the month. Unfortunately, this year we didn't have any reversals, but we did have the October lows, to say the least. All right, Russell doing outstandingly well, but very overbought. 90 plus 11, 90.11 at this moment. When's the last time it was up to 90.11, and what did it do? I can't see it, and that goes back 2 years plus. So this is the highest RSI level in 2.5 years, if not significantly more. I'm not even going to bother to look. That is a very, you won't be able to say that again for a couple of years. Next kind of statement, Qs. Again, except we're already lower on the day. Now, this is significant because if we're going to go down, maybe the Qs are leading the way at the moment. And if you wanted to go short, the Qs might be the way to go because it'll get heavier, quicker, faster. The Qs, I expect, by the way, on the downside retracement to get back to 391 or not 390. And that's not a lot. I'm only looking at a low, a break here for maybe the next 5 days, including today, 6-7 days, maybe into the end of next week, let's say, and then up. Monday, 2 weeks from now, or a week and a half from now, is Christmas. So we're running out of time for the Santa Claus rally to show us some kind of buying opportunity instead of just plain straight up. Next, NASDAQ March futures contract. Basically everything the same, but it actually left a small gap behind 3 days ago. That is not typical for futures contracts. They don't leave that many gaps around. So gaps usually are closed. And I think we're coming back to that level at least, maybe even a little bit more than that. I'm going to say 16,050. Next, EH to the minute. ESH, I'm at the March S&P. And now I'm going to go to futures. A lot of stuff to show you in futures too. The bond E-mini, same perspective, a little bit different perspectives, excuse me, but new high ground is the whole point, and extremely overbought is the whole point. 88.80s. Next, NASDAQ, 82 RSI on the futures contract, and this is a continuation contract now, not a specific futures month, sorry. So overbought conditions apply, absolutely. Bigger, longer term patterns apply, absolutely. And we are around where the markets started going down back in the fall and the beginning of 22 and the fall of 21. Next, bonds have reached and actually surpassed slightly my first significant resistance area, and they are also very overbought. The RSI is 82, which is in a normal overbought quote unquote condition. So I am expecting a retracement on the bonds pretty much immediately. 10-year notes, we are still long the 10-year notes from the bottom of the market. ER3 bottom 2 days after the green bullish ER signal. The bond market going backward one chart. We got in also at the bottom, but we got stopped out a couple of days ago at the low of a break, unfortunately, and that happens sometimes. So I'm not crying over spilt milk. 10-year notes still doing strong, to say the least. But I'm very concerned about this topping out, just like bonds, very soon. Crude, no comment. It's bouncing off of support and oversold conditions pretty strongly today. Let's see what happens when it gets up a little bit higher at the top of this resistance area, which is now a resistance level, but a broader support area. But the high of a support area can be a little bit of resistance. All right, so that's why I draw a rectangle in. Next chart is natural gas. Oversold still, but at least starting to come up feebly, nothing much. This thing could keep dropping, but that would be unusual. Usually when you get this oversold for this long, it turns up, and it turns up pretty substantially. And it won't be surprised to see it come back up to 3.069, where the resistance area basically starts. Next, heating oil has stayed below, has gotten below, got oversold, stopped on a rally at resistance now, turned back down, made new lows, and got oversold again, but bounced off another resistance support area, and is now popping back up again. This might start stair-stepping its way down. Say that 10 times quickly. So I got to wait a day or two to see what happens here. Next, gold. Well, we got a bullish engulfing, but it wasn't oversold, unfortunately. Therefore, this would have been a green buy signal yesterday. It's close, but no cigar. Now, with the rally yesterday being pretty profound and a reversal, we're following through today pretty good. Is this bull move, which we started with a bullish green reversal for October 6th for the ER, right on the smack bottom, going to continue? Well, we had this fantastic sell signal, lasted about a week and a half with a big break, but that's over. I'm not sure. I'm going to wait a day or two here. Next, silver is kind of similar, but we did officially get oversold with silver and right in the middle of a support area. And I'm not going to be surprised if this market comes up a little bit more. This is kind of a large area of fiddling around in over many months. In fact, at least a year. Obviously, I'm expecting it to top out around 25. Next, we've got resistance being reached in platinum today. I should pull this little zone over to the right. There we go. And it's not quite overbought. So closing an old gap. That's why that red zone is in there. How about that? We're almost finished. And that's a reason to expect it to stop rallying momentarily. And that would be for a few days and come back down to 950. Don't have a strong opinion here either. Next, although going back to platinum, we did get the top on a red bearish engulfing. We got the bottom on the green. We got another bottom on the green. We got that top. And so we've had very, very good signals for this here in precious metals in general. Next, high-grade copper. Again, between a rock and a hard spot. What can I say? The short-term trend is up. It's pretty obvious. But there's lots of reasons to believe it's going to stop again at a little under 4. Next, soybeans. We bought the bottom of the break with a green bullish engulfing in a support area. Today, we're starting to move back up again. I was pretty worried yesterday. Now, we're not stopped out. We didn't hit the stop, and the equity has been improving today, looking much better. I think we're going to attack the high of 1344. Recent last few days, and start to work its way up to again 1390, and hopefully we'll still be long. Next, bean oil. We rode it all the way down from the top of the double top formation, which turns out to be the head of a head and shoulder top formation, which turned out to have an objective down to 50, which it got down to 48. What now? Well, there's been a rally, but that failed. And now we don't seem to be able to hold rallies very well. We're about to make a new low close for a month and maybe new lows also. Bearish, looking for the bottom. We've tested at 48. Next stop after that could very well be 40. Next, meal. Support is holding a little bit better today and yesterday. I'm not overly impressed yet. And then it's got a whole bunch of problems up here. So I don't see anything wrong with it coming right up into the middle 40s again. 404 at the moment. But if it closes below yesterday's lows, that reverses pretty much everything. Then I'd be looking for a move down to 364. Next, corn. We've got the bottom on our ER buy signal, and we are out of the trade as of yesterday. We had a small profit. It wasn't very big, nothing to write home about. Today we're up very slightly. We'll see what happens next. I do think there's a chance that a larger bottom may be developing in corn. I kind of like this. If it goes up from here, I'll start talking about a bigger pattern with a bigger upside objective in the neighborhood of 530, but that hasn't started yet. I need to start going back up again, and we are out of that previous long with a small profit, so we won't be long at that time. Next, wheat. Not quite the same story, but at least it's got some support in the ballpark it's at. But the longer term situation, of course, is still very bearish ever since the beginning of the war. And shorter term, we just got overbought in a resistance area, just like I expected, and turned down. So I'm looking for a test of 569 and probably lower at this point. Live cattle. Well, we have been stair-stepping our way down a remarkable similar pattern that developed. I have to show this to you again. Okay, ER sell signal at the top start to come down. We hit a little low, bullish engulfing, rally high, bearish engulfing. We come down again, get oversold, and the next rally is back up to where it bottomed out before, which is now resistance. It just had done that once already. Now it's doing a second time. Now it gets oversold and does it a third time. Now it gets oversold and does it a fourth time. And now it gets oversold just a few days ago and just did it a fifth time. I don't see anything wrong with it coming down into the support area. I think the next low is going to be in the neighborhood of 159, 160. Next, hogs. Very strong rally today. I don't know. This is looking more bullish than I would have expected. Certainly didn't give me any clue of it happening yesterday or starting, this was going to happen today. I'm going to shut up and wait on this one for a bit. OJ, false downside breakout yesterday. At the time, I remember saying that this looks like a bearish breakout, and the downside objective I measured for you, which is still legitimate at 487, but it's buying some time by staying at the neckline on a closing basis or today's opening and low and bouncing back up some. At any point now, for the next few days, if it closes below this line, you will have a legitimate downside breakout, especially if the volume is very high and the move down is pretty sizable. New low closes by a large chunk is what I'm saying. But that's not happening. So support is holding it, which is the neckline. And I'm still within the approximate time zone, only a day late. Yesterday was my exact date, and it actually topped out the day before that with a bearish engulfing. So I don't have any major problem with this bounce today. And the next couple of days, it could very well drop below the blue line and be breaking out, and I'd still be talking about, which I cannot abandon, 287, 288. Next, cocoa. I don't know. I'm going to have to say, obviously, bull market, no ifs, ands, or buts about that. The next downside correction could easily be back to 3,730. That would be a pretty significant correction, and I would hope to get a sell signal before it starts, but we're not quite overbought. We haven't been for a few days. We just have a good divergence series going, and at any time, we might get a signal, bearish engulfing, but again, it won't turn red. Next, coffee. We are overbought, and that means if we start to slide below yesterday's low today, we'll have a signal. But that's not happening. We're up above resistance, staying above resistance, and that's not unusual when you have upside breakouts. So we just might keep going here. Look at the high today is very, very close to the highs we made back in April on this continuation contract. So I would expect a minor dip here. Maybe very well back to 175 is not without expectation. Next chart. Sugar just simply crashed through support, made new lows for an extended period of time in the last couple of days. Finally, it looks like the overbought conditions, which got worse, and all the way down to a pretty darn low 14. The last time we were down to 14, this happened, and that was the bottom for months. Maybe. I first moved back up to 2360, 70 area. If it can keep on gaining strength, then it probably will stall out again at 25.25. We'll see what happens. Cotton, rock in a hard spot, bobbling around, long-term trend, basically still down. Let's wait to see what happens here. I got nothing. It looks like maybe a bearish engulfing today, implying it's going to slip off some. And back to the E-mini, which, ladies and gentlemen, has gotten a little bit weaker. Let's go quickly look at the actual short-term indexes on this workspace. And I want to take a quick peek at the 1-minute charts. Okay, well, we have made new lows for the day in the spider, which is now up less than a point, only 75 cents. Pretty much low and last right now. We're also doing something a little similar, but not quite as weak, as fast in the DIA. And the QQQ actually has made significant new lows and dropped off much quicker. And all of this started at approximately 9:48 when I started talking about it turning down. That's nice. We're in the middle of yesterday's range for the Qs. I remind you, we've got 2 hours and 45 minutes to go. Tons of time for this to get below yesterday's low. Any of these indexes, if they get below, and we're already down 160 in the Qs already, if they get below yesterday's lows and stay below yesterday's lows, will give me a red ER sell signals, which is what I would love to get. You guys have a great day. Profitable trading to you. Mañana.